All right, what's going on, everybody? In this video, we are creating your entry model. Now, your entry model needs to be based solely off your trade idea in alignment with the overall market context. So, are you trading a breakout, a momentum, initiation, continuation play, or are you trading a reversal, a pullback, a balance trade, a mean reversion trade? Your entry model needs to have a certain set of parameters aligned with your overall trade idea. Now, some of them are going to have a higher win rate, some will have a higher risk to reward. I like to have as much of both as possible, and I'll show you kind of what I do in order to be able to achieve that. But there's not one right way and not one wrong way. It's understanding the tools and the data that you're being presented with and making entry decisions based off of that. I am not selling you a 95% win rate, 17 RR with this one entry model, right? That's BS. It's not reality. But I will give you the tools that you're going to be able to tailor to yourself. And when you see these show up, it gives you the most chance of success. So if you guys don't know who I am, my name is Jaron, or Jaron Trades. And a year ago, I struggled to keep $1 in my bank account. Now, in the last 90 days alone, I've made over $100,000 in prop firm payouts. So everything I'm showing you guys is what I've incorporated into my trading and found success with. I am doing this for the week of Thanksgiving, so the 24th of November to the 26th. And I am going to show you real quick through my Discord that these are all trades that I called out in my premium group. I'm going to show you the best trades and how I manage them. And so we're going to go ahead and get into that. First, this is the second video in my order flow series. So if you have not watched the first one, I'm going to go ahead and link it. Please watch that video before continuing on. It is over an hour and a half long, and it is showing how I find the best areas of location where big moves, either huge continuation or reversal moves, are likely to happen. Your entries are automatically going to be better if you're trading at the same level that the market's likely to make a huge move from. So please go watch that and then come back and watch this video. And lastly, before we get started, I'm using deep charts. So obviously, I have learned a lot from Fabio and Andrea. They are two of my GOATs, two mentors that I have learned so much for. Nothing in this video or in the last video am I claiming that I created. I did not come up with order flow. I did not come up with deep charts. Nothing did I invent. I am simply a 24-year-old man who loves order flow. I love trading, and I've found a little bit of success with it, but I am always striving to learn from those ahead of me, like Fabio and Andrea and Order Flows and Carmine, who have accomplished a lot and made a lot of money. So anytime they release a platform or a video or some kind of boot camp, you best believe that I will be there learning from them, because they are better than me and I want to follow in their footsteps and one day be like them. So just prefacing with that, everything I'm using in this video, I have learned from those that are great at this game, and I want to be like them as well. So before we can go ahead and get into it now, then just thought I needed to say that. I'm going to go ahead and make myself smaller as well. That way we can have the full picture. Cool. So, like I said, I'm doing the 24th through the 26th. I am using a 5-minute chart, a 1-minute chart, and we are using a range chart because Fabio created the deep effort indicator, where it is a price-based chart instead of a time-based chart, and it shows where the areas the most amount of pressure and effort from one side is, so you can see through probability where the most chance of finding a big expansion move from buyers or sellers is, but you want to use it in alignment with your overall trade idea, and I will show you guys how I used it this week. So we're going to start with a 5-minute and frame hour trade, and then we will get into it. So what we have is a 3-month composite on the right here. So it is the volume profile for the past 3 months, which gives me all the data to the left of me for NQ. You can see Thursday, we had a huge sell-off, and Friday, we found support down here because we had a couple pushes down below this value area low, but then had a huge push to the upside out of it, meaning buyers clearly found some support here and created a very big move off of it. And we pushed ourselves back into this range. And even on this pullback that we had in the overnight, It was the same level that we pulled back to, where once, twice, three, four times that we found support here, we had huge expansion moves off of it. So already seeing this going into the market, just looking at the higher time frame context, I can see, okay, higher time frame bounce, lower time frame, we clearly have pushed back up into the value area. At least the point of control and VWAP and this huge high volume node that we can see here could be a very strong target that the market's pulled to if we can find success from buyers, right? Now, this profile here, it'll come in handy in the next two examples, but it's just a weekly volume profile and we're on Monday. So it's going to be the exact same as this, right? Nothing too crazy. So then we go into the session profile and we're looking at the overnight. What we see is, okay, we have an area where 1, 2, 3, 4, 5 times we've rejected out of here. It's a business zone, but they have marked on the volume profiles where there's a lot of POC shifts, clearly a lot of interest at this level. And as bullish as I am, it would be much more advantageous for me to see buyers reclaim this level before I took a long, especially if this is our overall target. Because if I were to just long, blindly at market open, let's say we do break through it, great, I got a better risk to reward and a better entry, but I do feel as if that's more guessing than if I wait to see if buyers reclaim that level, give me some kind of pullback, and then I go long, right? So I'm always willing to wait for a little bit more confirmation, and I'll show you through the deep effort indicator how to still have an excellent risk to reward and still have more confirmation. So you'll have a higher win rate and still have a very high risk to reward. I know it sounds crazy, but Fabio absolutely killed the indicator. It's so good. It's actually insane. So context, I'm bullish, clearly higher time frame. We pulled back up into this range, but I would like to see this level, clearly ran through. So then we go to the 1 minute and we see, okay, same information, delta profile here, clearly buying support at this level. We are at the value area high, and 1, 2, 3, 4, 8 examples of a lot of aggressive buying up here, and we continue to move lower. I have the CVD, the cumulative volume delta, to be able to see if this is in alignment with what the market's doing, and the speed of tape, which you want to see is on a breakout or on an initiation move, a momentum move. You would want to see price and the speed of tape be aligned. So if there is a lot of buying effort, you would want to see the speed go up and you'd want to see it reflected in price. If we're breaking out and there's not as much speed on the breakout move, you'll see that a lot of the times that's a higher chance of maybe a reversal. And we'll go through an example on the day after this one. And then lastly, when it comes time to find our entries from the 1 minute, we will go to the range and we will look at how we can use these zones to frame an entry based off of it as well. So I have this on 3x speed. Let's go ahead and get into the first example. And before we get into it, I wanted to say this real quick too. You can see clearly there's 1, 2, 3, 4, 5 examples of aggressive selling right here, right? So if we can find buyers reclaim this level, that would then trap these sellers to then initiate and ignite a further move up to our overall picture of where we're wanting the market to go anyways. And we can see on the speed of tape, and I know the market just opened, just want to see it in its fullest picture. Yeah, there's clearly a lot of momentum on this move. So let's watch it. Okay, so as of now, we had another push up to this value area high, and these buyers are trapped at the moment. Until we reclaim, I would want to see this level reclaimed. Here is the first interesting piece of information. We know that there were 5 sellers on this move down, and now on the first 1 minute candle, what we see is a lot of aggressive selling came in, and the market immediately pushed up to the aggressive buyers to this imbalance and are moving higher. Speed of tape, still a very strong push up. Now, what does this tell us? There are passive buyers helping fuel this move, right? Because if there's a lot of aggressive selling and we immediately push up, passive buyers supported this range and the market immediately moved up off of it. If we look at the 5 minute, okay, we're right here at this business zone, value area high. I would like to see this level broke through, and I'd like to see some kind of reclaim of buyers to show me that they're interested in continuing this market up. And then if we look at the range chart and we look for the indicator, okay, the level that we had a lot of selling on, right? A lot of selling here. Once buyers stepped in, we created this zone where there's a lot of buying pressure. We pulled back to it with aggressive selling right to the tick of this level, and immediately buyers step back in. Now, the reason this is going to be the entry model video is because if we go through our example and we say, Jaron, but we already know that the overall higher time frame context is bullish. We bounced off this zone, the higher time frame value area low. We pulled back on the internal, held this business zone, pushed up. We have trapped these sellers. We have clear bullish intention. This delta, the stats are showing that there's a positive delta percentage. Looking on the 1 minute, clearly buyers are back in the green. They're being rewarded. Failed selling. Like, why can't I just take a long here? I'm not going to tell you that you can't take a long here. You have every right to go, yeah, there is a lot of failed selling at this level. And there is clearly a strong push up off of it. And we've reclaimed this imbalance and we've reclaimed these buyers. And this profile and this effort zone has clearly trapped all these sellers, and we're seeing a strong push out of it, right? You're clearly justified in saying that you want to take that long. But what we talked about was, I want more confirmation. I don't want to guess. The fact that we rejected this zone right here once, twice at open of Sunday, 3, 4, 5 times, and now that we're back in this level, it would be advantageous for me to see buyers push through this area and break out and hold the breakout. Because what if we break out this level and there's a huge amount of buy orders that come in and then the market immediately moves away from it, trapping all the buyers? Well, now clearly I have to see that now this could be some kind of move to the downside, right? I want to know the picture and I don't want to guess. That is why this is an entry model video, because I can't tell you one is better than the other, but I can tell you one is going to give you more confirmation. And if I wait for this high to get broke and hold and see more volume of buyers wanting to fuel and move up further, that's going to give me more confirmation in my trade. Now, if you were to enter here at these sellers and see a buyer step in like this and clearly get in, if I need to wait for this to get broken and create some kind of imbalance and hold, you got a better entry than me. But does that necessarily mean that your risk to reward is better? And I'll show you what I mean. If this is your entry model right here, your stop is either invalidated here or it's here. And you're going to ask me which one's better. What is your entry condition? What is your trade idea? We're looking at the same thing right now. What is your idea of what the market's going to do? Do you think it takes this high? Do you think this was the last seller and that this zone is finally held because it held 1, 2 times? And you do this. You go, I'm just going to use this as an example. I'll buy one. And you go, well, this zone was created from these trap sellers. We had a fuel move out. We pulled back once, held 1, 2, 3, 4 times. And then on the 5th pullback, we had trap sellers. And so if your idea is this zone is still valid and can hold if retested, you would have to put your stop here below the zone, correct? That would be your trade idea. So your entry model has to match your trade idea. That you say, hey, this zone is still going to support if we pull back into it. But then what if your trade idea is this? We created this aggressive move down when buyers stepped in. We had a huge pop and it created this effort zone of a lot of bullish volume and pressure and price. And we held it 1, 2, 3, 4 times. And then on the 5th time, we had one more push of aggressive sellers and instantly moved away. So if that's your trade idea, you say the fact that it's held 5 times, if it were to come back here, there's probably not much stopping it from going back down here, right? Because it's held this many times. And you said, if your idea is this was the last seller, this was the last push at this zone, and I can see, I think all these sellers here are trapped, that the market will not come back here to this level. Well, then wouldn't it make sense that you put your stop here? And you ask me, well, it's only a $200 difference. No. that adds up. That adds up very quick. Because if you have 5 minis on, you go from 2,000 to 3, right? Yeah, 3,000. Quick math, right? So the more size you use, the more this is going to change. And so having a risk to reward that matches your trade idea is the most important thing in the world. Like I said, this is not the trade that I would take because this is still up in the air to me. This is still a lot of trap buyers that until this is taken out and I see clear buying aggression that holds and wants to continue moving, this to me is a lower probability trade, even if it does work out. And it's not, you're not wrong for taking it because this was your trade idea. Or at least you say, hey, I think we're going to attack these highs. And so if that's the case, I think we're at least going to attack the highs. I at least get a 1-to-1, right? So maybe that's your trade idea, is that you're just targeting the high. It all depends on what your trade idea is, guys. And I'm going to go ahead and take this off here. Lost a little 15, but we make that back in abundance, and I'll show you how. Because this is not the trade that I would take. But if you did, you'll see clearly, and I'll go ahead and play this, that we clearly come out and take these highs. Now this is what I want to see. First, let's analyze this. We're clearly above, or we're buying through the business zone, right? A lot of aggressive buying at this high. You would not want to see the market move away, like I said. We look at the 1 minute and we say, of course, the same thing. The speed of the tape is still the same. Still a lot of aggressive buying here. CVD, same thing. A lot of aggressive buying. Everything's in alignment here. But what's really good to me is that when we look at this range chart, we see, okay, on this aggressive push up, taking out this high, we created a new zone. Now, I would want to see this zone hold and then see aggressive buying out of it to show me that buyers are still willing to push this market higher. And the reason I wanted to wait, and what I said earlier, is this. What if we take out this high with all this aggressive buying and you go, oh, there's a lot of buying, I want to get in the market. And then we immediately move away from the zone and run through it and create a sell one, and then we go down to these lows. Because that can happen very easily if you're not watching and being more patient. That could happen so easily. So now everything is aligning for me to look for longs. I just need to see this zone hold. Sorry, I had to take a drink. But I really want this to make sense. I want this to make sense that if you took this trade, you weren't wrong. But if you wait for this trade, you're going to have more alignment through multiple time frames, through the context, the location. And now, if this were to hold and buyers can support, we have a clear destination the market wants to go to, aligned with the overall auction, and we can actually see the confirmation through the buyers and sellers. So let's see what the market does. We didn't get the retest. Okay, here we get the retest. Retest one. Run through these sell imbalances. I would still want to see aggressive buyers come in. Here we go. Aggressive buying comes in. And if we look at the 5 minute, we see, okay, yeah, we're clearly, like this 5 minute candle's clearly pushing up, above this business zone and this level now where we were failing a lot. And now we're seeing a lot of strong buying through it. We look on the 1 minute and the speed is there, the CVD is there, and we can see the buying pressure still holding. And then we look at the range chart and we say, okay, this level's now held twice. We've run through these sell imbalances after we trapped these sellers, and we've taken out this high, and buyers are still clearly buying at the highs. Everything is aligned for me to take this trade. I'm going to get in. And we held it twice. Now back on the trade idea. Is your trade idea here that this zone is only held twice? If it comes back down here, it could still hold again. I'd put my stop here for a crisp $500. Now, if you say, but I think this was the hold, and now that we see aggressive buyers hitting the market, The fact that we had aggressive buying, pullback, more aggressive buying, this should mean that we pop and we should have a very strong and electric push up, because this was the pullback. These were buyers that created the fuel and this move up. Now we got more buyers coming in. This should be the move up. Which way are you looking at? For me, I would be a little bit more conservative here, and maybe I put my stop here, because worst case scenario with 1 mini, if I lose $500, okay. My stop is still giving it a lot of room and I'm not losing a lot of money. But the reason I'm making this is because if you were just looking on a 1 minute candle, where would you put your stop? Would you put it below this candle? Would you put it below these buyers? Would you put it below this wick? Where would you put it? If you weren't able to see this, where would you put it? Would you put it, yeah, like the same thing, like where would you put this? Under the value area, the high? Is that where you would put it? The point of me showing this and why I'm so fascinated with this indicator that Fabio made is that it allows you to wait for more confirmation. You're able to see the pressure of buyers step in at the high to show continuation with the aggressive buyers. We have full alignment, and I don't have to have a wide stop. So my win rate is going to be higher if I stick with this, and now my risk to reward still gets to be really good. So this is the alignment. And what do? I go, well, now that I'm in this trade, where did I say I wanted the market to go to? Right here, right? Like that was the destination. That's where I wanted the market to go to, and I'll trail accordingly, because that was the trade idea. So then we play it. Now we have a new one created. Okay, this clearly is bullish at this point, right? And so maybe now you put your stop under this one. Depending on the size, what's your entry model? How do you want to manage your position? I see a new one created. There are 3 of these bullish zones now created. Selling came in and we immediately ripped up. Maybe now I put my stop here to break even, because it's right at the top of this zone. If you're being really, really aggressive and you are already up, what, 50 points? You go, I want to secure some of this, and I'll put my stop here. So then you get to put your stop here. More aggressive buying comes in. You'd want to see a new zone created. You wouldn't want to see a bearish zone created, because now the effort and the pressure has flipped. Clearly a ton of buying coming in. I'm going to speed it up just a little bit. New zone created, right? So maybe now you go to the top of this zone. All of these zones have held. If it were to break through this one, what would stop it from coming here, right? So I want to protect it, and I want to secure some profits. We look at the 1 minute. Clearly the same thing. The CVD is obviously increasing like crazy, which is great for us. The speed of the tape is still very high. Still a lot of buying coming in. That initiation move had a lot of volume, and there's follow through. This is still great. This is still a very bullish position. You're looking at the 5 minute. Yeah, we're way above the zone that we wanted to see the market go through. But if you were just looking at a 5 minute chart, can you see just through this where you would have entered? I mean, you see this huge pile of aggressive buying here and you see a push up. Maybe that's where you entered, but this is what gives us confirmation and a really, really solid risk to reward. I'm very impressed with this indicator and just how it aligns with everything else that we already use as order flow traders. More aggressive buying coming in. And what gives us the most confirmation? Aggressive buying comes in, we move up. Aggressive selling comes in, we move up. Aggressive buying comes in, we move up. Aggressive selling comes in, we move up. Passive buyers and aggressive buyers are both supporting this move up. As long as aggressive selling comes in and the first reaction is the market goes whoosh, and it pops and it goes up, I want to be a part of this trend, because all they're doing is adding more fuel. They're adding more liquidity and more volume for passive buyers to absorb and to push the market up. I want to be part of this as long as I can. New one created. push up immediately, right? So now we have a new one, two created at this very, very fast, and maybe I put my stop here. I'll trail at the top of them. Okay, interesting. This is the first time in this entire move up, which may look like a long time, but it's only it's only like a 7-minute candle, or only 7 minutes, right? That's why I like to have all three of these things at once. All up, 3 different monitors. This is the first time that aggressive selling comes in and a selling imbalance, and the market moves down. Because every other time aggressive selling comes in, since the market's been open, the reaction is we move up, right? So what do? Do you wait for this to hold? Because you say, hey, maybe this is just a quick pullback to move up. Do you get out? Because you go, look, I was just going to hold this trend as long as buyers are in control. This is the first sign that sellers may be in control and I don't want to be a part of it. Or I just put my stop here to cover myself. I would put my stop probably here to just cover myself, just in case this does hold, because we could easily find support. But this is alarming that the first time in this whole trend we have selling coming in, yeah, we actually have a push down. Showing me, hey, if buyers can't buy out of this, it'd be very easy for this zone to then break and then come down here anyways. You also look at the CVD and the speed of the tape. You go, okay, a lot of buying, selling at this upper wick, move down. It's also the first time that we have a candle on the CVD that's bearish as well, and a huge upper wick on the bullish one. And it's the first time that the speed of tape candles are not green, right? So everything's aligning here for us, looking at the order flow, looking at the aggression, looking at the participation from buyers and sellers, right? That, okay, came up to this area, you know, at the edge of this high volume node that we were targeting. If I pull this out, it's the exact edge of the high volume node of the higher time frame. It is the full HVN. Came right up to the edge of it and wicked away, and sellers came in. We didn't accept into it. So even if it's a short-term pullback, we have our location, okay, pulled up to the edge of this high volume node. Immediate reaction at this level is seller stepping. And we can see that on every chart that we're looking at. And what happens? See a buying move out of it. Clearly didn't break through it yet. Now, okay, we did find support. We did find support, actually. And we created another bullish zone from this chart. So now, okay, bulls did step in here, and we did see this zone hold. I'm now going to move my stop here. And I'd want to see a new bullish zone created. And we came and ran through both of them. But it happened at this same level that we know is the edge of the high volume node, where we were initially targeting, but we were just going to trail. And look, the CVD is also red, and the speed of tape candles are also becoming bearish, right? So there's full alignment here. So it would be safe to say now that these bullish zones have been ran through, maybe you're still bullish overall, but if you wanted to take a short scalp because you just want to target some of this move, maybe for a potential push back up, you would want to see one of these bearish zones created, especially considering, well, these buyers are trapped, these sellers are in control at this deviation band, ran through this zone. I'd want to see a bearish zone created, right? Oh, yeah, would you look at that? I'm going to speed it up. And we have a pullback. And it may not look like much, but, you know, from this level, 691, down to this low, you're looking at about 70 points, right? You can make a lot of money with 70 points. And you can continue playing this range, but it all depends on your trade idea. If you took this short right here, are you putting your stop at this candle because you're saying it's not going to come back up? Are you putting your stop here? Or are you putting it at this high up here? It's all dependent on what your condition and what your entry model is and what your trade idea is. Because if you shorted this, just looking at the 1 minute chart, you would have put your stop at this high and you would have had a wider stop. But because we're looking at this chart, we're able to have a tighter stop, have a higher risk to reward, and still be a part of the main move. Now, this is something I really want to make sense before I move on to the next example. I'm going to speed it up a lot. Let me go to the 1 minute real quick. Yeah, okay. So watch what happens here. We have this aggressive buying that initially fueled this move up, and we pulled back to it. Buyers and sellers fought here. Clearly buyers won. We had to push back up into this range, and we pushed up higher. We were already bullish because we knew where the higher time frame draw was. We saw a huge buying candle at open, pulled back to this level held, of course. But if you were just looking at this chart the entire time, it would have been very easy to get stuck and go, well, here's a sell zone, buy, sell, like buy. Okay, like if you were just looking at this chart alone, it would have been very easy to get stuck here, just wanting to take every single one of these zones that you see. That is why I am very consistent on, before I ever get into the trades, I'm showing what the overall picture of the market is, because it's much more important to have the overall idea of where the market wants to go than trying to just take every little scalp that you possibly can. We knew the direction was bullish when we approached the market. So it makes sense that when we pulled back down here to, which at the time was the same business zone that we originally saw. It was this same area. We pulled back to it, found support, and then pushed up out of it. And it's really easy to see on the 1 minute. Buying and selling here. Buyers step in, create two buy imbalances. Sell imbalances created. We rip through it. Yeah, the draw's long. CBD was in line. Speed of tape candles in line. A lot of effort on this candle, about as much as this one, and we still had follow through. Everything's pointing to bullish. So if you're seeing these and it's opposed to the trend of what the market wants to do, you have to understand that your targets have to be areas the market can reverse, because yes, failed buying. Yes, failed buying. But where did we continue finding support? At these same levels that were created on the move up, right? Support at this level, support at this level, support here at this level. And that is in line with the overall picture of where the market's going to go. So then when we have a double one created here, it's not just the fact that there's two stacked on top of each other that's important. It's, okay, we reclaimed this deviation band above VWAP, but it's also after we saw buyers win this fight of failed buying and sell, or buying and selling coming in, buyers won, reclaimed, created bullish imbalances, more selling fails, and we see a push up out of it, right? It's understanding the overall picture, because on this pullback, all we did was pull back to a low volume node and the initiation from this previous high, right? Because if we go out and look at the low, yeah, it's this exact area where resistance became support, pulled back to the initiation where the buyers completely overwhelmed the sellers, which fueled the move up, and we found more buying down here, and that's fueled the move up, right? And you can see it once again on every single time frame. And so if you do have deep charts and you are using this effort indicator, it is such a great tool for entries and confirmation and risk to reward, but you have to use it as a tool and not alone. And by the way, I think you could make a lot of money with it if you just used it alone, but it's going to be much more advantageous if you are using it with the overall draw and still looking at a time-based chart to mark out your levels and then see, okay, this is the area that we had initiation from buyers, which had these zones here. We came down here, buying and selling going on. Oh, and now we created a bullish zone out of it. And then we created another bullish zone out of it and another stacked on top of each other. And there's a lot of buying and selling going on here, selling zones happening. Oh, and we broke through it with aggressive buying. Maybe that's my long, right? No matter what you look at it, you would have been right. But you're right, and you have a good entry because you're using these zones, yes, but you're also aligning yourself with the higher time frame draw. So I'm going to go on to Tuesday now, but I hope that makes sense. I really want it to make sense, because if you can get these things down, your chances of winning and making a lot of money in this game are extremely high. So getting this set up now. And that was just Monday. And guess what? That was only like an hour. Like, you see these things throughout the day. Okay. But it's when it's aligned. It's when it is aligned with your overall narrative and where the auction wants to go. That is when you get the best trades, the best entries. All right, Tuesday. Let's get into the framework. Cool. So what did we know? Monday, we had a clear bullish move, right? I mean, clearly, we had a strong, very strong rip up. This is that same move that we looked at, initiation, pullback, rally. Awesome. And what happened was we basically consolidated at this zone the rest of the night, right up here at the point of control, this high volume node, this area, basically this double distribution of this composite. So now we can kind of look at the weekly profile, if I can get it. You're not going to let me? Are you not going to let me look at this? There we go. So now we can look at the weekly profile too as more confirmation. Awesome. So we are right here at the upper end or the lower end of this point of control of the weekly, high volume node of the high time frame composite. But still the draw on the auction is clearly bullish, wants to move higher. What we see is still, way below all-time highs. And I want to do this just for this example to show you guys, because I did call this out on Tuesday in my premium group, and it's pretty fascinating how it works. If you draw a volume profile from all-time highs down to this swing low, which I still always encourage, I talked about that in my last video, is to have a high time frame from all-time highs profile, just to give you the levels of this zone that we're playing in. Go to VBP, settings, peak and valley, and also put on the business zones for this as well, right? So we can see value area low and business zone of the all-time high profile is right here. And we found support on it 1, 2, 3, 4 times right after we reclaimed. So that could be an area I'm interested in the market going to. And just know this is what I do every day before I get into the market. Like, these are the zones that I'm marking out. I do a pre-market analysis where I go through and just show all the levels that I'm looking at. So, but clearly bullish, right? We still strong push up at the end of day. But what I am noticing is, well, we are at the upper end of this point of control of the weekly, high volume node of the composite. And what we're seeing is, well, pre-market, we rejected this area up here 1, 2, and now 3, 4 times. I'm pretty sure this is PPI day. And we have a business zone down here, which is the value area low as well. So if I'm bullish overall, and I want the market to continue the auction moving higher, I need to see buyers reclaim the value area low, reclaim the business zone, so we can trade up to VWAP, and we can trade up to the point of control, and we can trade up to this business zone and these highs and the value area high and continue to move up. Safe to say, right? Safe to say that if you're looking for longs and you're looking to be bullish, you want to see buying, move the market up. Pretty safe assumption, right? Cool. So then we look at the 1 minute, same thing. We can see this is the value area low. Okay, clearly I want to see buying step in and break us above this value area low and trade back into the range. We can go to VWAP, POC, value area high, these highs. That's what I want to see. If I'm long, I need to see at least us reclaim this level, because if you watch my last video, we know the value area low could be an area where buyers say this is cheap, and buyers and sellers say this is too cheap for me to sell, and buyers say this is cheap enough, I'm interested in doing business here. So if this value area low is where buyers are interested in getting back in the market, it would be safe to say they won't have a hard time getting back into this range, right? If this is where buyers are interested and sellers say it's too cheap for them to sell, it should not struggle to get back in this range. Please understand what I'm saying, because this is not just applicable to this day. This is forever going to be applied to how you see the market. If the market's going to move up, it's not going to struggle to do so, right? If it's going to move down, it's going to happen pretty rapidly. It's not going to be hard. it's effort versus reward. If you're seeing a lot of effort and the market isn't moving one direction, hey, maybe there's a signal for you. Maybe there's a reversal coming, and I'll show you what I mean. And then we get to look here. Cool, value area low. But as of right now, selling effort is in the market, not buying effort. So let's look at the chart. And I'm going to put this on 8 speed. I want to go through it decently quick. I already know what you're thinking, but just give me 1 second. We'll really dissect the whole thing. We're going to dissect every bit of it, because this was the easiest trade I've ever been a part of. I mean, this seriously was the easiest trade I've ever been a part of, and I could walk through it step by step, but it's going to be much easier to do it here at the end. Yep, there they go. There they go. Okay, I think that's enough. There's a lot to dissect on this one, boys. Let's go to the 5 minute. So first of all, we're bullish. We want to see these highs attacked. But this first candle, despite having a very positive, despite having a positive delta and delta percentage, we closed red. Despite the attempts of breaking back into the value area low in this business zone, we were red, and all these buyers are trapped, and now we're moving away from it. Step 1. And what did I say 5 seconds ago? I said that if we're going to push back into the value area low, buyers will be rewarded doing so, and it will not be hard, and it will be effort rewarded. But instead what we see is 1, 2, 3, 4 with this buy imbalance attempts of trying to break and trade into this value area low. Despite our attempts looking at the CVD and how obviously bullish it is because there's a lot of buying effort, highs, higher highs, high, lower highs, we are not able to trade into this range, and now all these buyers are trapped. Now, the name of this game is the entry models, right? So if I say that if the market's going to move up into the value area low, it's going to happen very fast and buyers should be rewarded. Do you want to take a very high risk to reward trade and say, hey, dude, there's 1, 2, 3, 4 attempts now that buyers have tried to break back into this range and it's just not going up? It's safe to take a short here. Yes, it is. It's safe to take a short here. And you'd put your stop here. Even if you would have shorted this and had your stop here, you still wouldn't have got stopped, right? But it's safe to say these buyers are trapped. Maybe this is where I want to put it. That's a safe trade. For me, I would rather, just for the ultimate confirmation, because we know, and we're going to look at this tool, that we can still get insanely good entries with this. And you can see, well, I wouldn't want it to short, and I was just showing you that as an example because, well, we're still in this bullish effort zone. So as long as this holds, I don't necessarily want to be in a short. Despite that, you know, these two are holding. That's absolutely true. But we want confirmation, or at least I want confirmation. That is my trading style. So I would say, still looking at the 1 minute, I want to see at least these buyers and sellers here, because as long as the market's above this, at least this buyer is rewarded. And as long as the market's above this seller's trapped. Despite the CVD, I get it. But another thing I want to show you that will hint as to why this market moves down, and I'm sure maybe some of you have already figured it out, is this. Look at the speed of tape on the first candle. And you're saying, yeah, it was a very strong candle. Yeah, it was. And guess what? The candle was red. Now look at every candle when they were bullish candles. There was no effort there. We saw what the day before looked like when the market continued moving up. These candles were consistently green and they were still very high. Now, the first candle was the initiation candle. This initial 930 candle was red, and it had a lot of volume. Then every bullish candle didn't have a lot of, didn't have a lot of participation and pressure behind it, did it? And clearly, there's a CVD divergence here. I'm showing you guys this because if you really know how to frame these trades and look at this, it gets easy. It gets almost like a video game where you just wait for these things to show up and it gets very easy. This Deep Charts is such a good platform. Fabio and Andrea seriously just have exceeded my expectations with this. But that being said, maybe we want to wait for the speed of tape to show a strong candle on a move down. And we want to see these buyers really trapped. And we want to see this zone shorted through in a new bearish zone. There we go. And we want to see, well, we're already below this business zone too, and the value area low. So maybe we just want to see this zone ran through and a new one created, right? Well, let's watch. Buyers are really trying. There we go. There we go. Now I'm going to pause it because there's a lot to go through on this one too. Clearly, you can see on this candle that we pushed down, and we look at the speed of tape, that candle that had the aggressive move down where sellers were actually rewarded, had a lot of volume on it, a lot more than these other candles. We look at the CVD, it's finally in line with the market's doing. This move down had an aggressive sell imbalance. It had aggressive selling and trap buyers. So as long as we don't reclaim this level, sellers are in control, confirming the CVD, confirming these trap buyers up here. Now, as far as and we'll look at this, clearly we're below this zone and we've taken off, right? Oh, and the delta's flipped negative, negative as well. But your entry model, what kind of trader do you want to be? And there's not a right or wrong answer like we talked about at the beginning. Do you want to go, hey, well, there's a lot of buying here and we moved down. There was selling taking control here and we moved down. We ran through this zone and created a bearish zone. I'm getting in short here. And my stop can go right here at this value area low. That's a trade. That's a trade. Like, dude, that's a trade. Yes. Even if you were on the 1 minute and you just went, yeah, I'm taking this trade because there's 4 instances of trap buying. As soon as the seller steps in, they're going to help me and fuel a move down. Yeah, we got that too. But here is where I'm interested because clearly sellers show us they're in control. Through 1, 2, 3, 4, call it, because we ran through all this, examples. Failed buying, aggressive selling rewarded. And now we have a buy and a sell zone, meaning there's a lot of effort on the market right here. There's a lot going on right here, dude. So whichever way the market goes, we are leaning bearish after seeing everything else. We are bearish, right? So we ideally want to see it move lower because that aligns with what we know the market is trying to do. If it were to break up to the highs, well, this could still hold, this could still hold, that could still hold, the VWAP could, right? Because then you're really going against the grain. So ideally, if I want to get in short, I would like to see this zone hold, this one get ran through. Let's watch what happens. There was a double, right? Two of these zones, meaning there was a lot of buying effort. And the market said, we don't care. And we broke this zone. So once again, we're going to place a short and we're going to put our stop right here because we retested this level once, twice, failed buying, selling rewarded. This bullish zone failed twice, right? After this one held, this was created. The reason is if you're just looking at this right here on the 1 minute, to be honest, your stop would probably be like right here because you're like, oh, well, there's these sellers. Or you might put your stop here. Or maybe you put it at the value area low. Or you're like, I don't know where to put my stop. I don't know where to put my, do I put it here at least, right? It can be hard, especially with how fast-paced this is going. because this is all in real time, all happening. But through this indicator and this range chart that Fabio created, and being able to just see the overall market and how buyers and sellers are interacting, and then being able to wait for the confirmation and still get an insane risk to reward, it's phenomenal, right? Because now we know where to put our stop. Because if the market were to come back up here and stop us out, great. Because if we come back up here and sellers still are in control and we see a bearish move out of it, I can just re-enter. And I didn't have the widest stop in the world, right? So then we say, okay, how does the market interact here? Clear put and aggressive selling steps in. I'd want to see a new zone created, right? You'd want to see a new one created. A new one's created. Maybe we put our stop now here. New one created. Cool. We'll put our stop here. New one created, and it was retested. We'll put it here now because the bullish one got disrespected, right? Okay, now we're out. 1 mini, $2,400, right? And do you see how many times, and I know I went through it quick, but I know you have a lot of light bulbs going off in your head. Do you see how many times that when this is created and you get your pullbacks and you get these bullish imbalances ran through and you get sellers moving away from this zone, you could add to your position, right? This is created, we get a strong push up with a lot of bullish aggression and we move away from it, creating it. Bull, I'll add to my position, pull in, retest, move out, I'll add. Like, think of the possibilities that you can do using descending. Like, it's seriously insane. It's phenomenal. I'm glad, hey, I'll get out of this, right? I'm out. That's a great trade. You think that you got a late entry here because you didn't get in up here, but look at all this gold that you were able to accomplish just because. And we kept a very tight stop in the meantime, right? What did we risk? $400, $500 to make $2,400. The risk to reward is phenomenal. And we look at the 5 minute and we go, okay, well, where did we find support from? Because, like, what happened? Oh, that makes sense. Yeah, that checks out. Higher time frame, all-time high. Volume profile to the swing low, value area low, this business zone. Wow, same place that we found support. Is that not crazy, huh? Buyers step in at a value area low. Is that not crazy? And it's a business zone from a very significant piece of structure. Is that not crazy? And now for the first time, and we're looking on the 1 minute, we go, okay. There was a lot. This candle right here, this speed of tape candle, has just as much volume and you know, a lot of speed as opposed to the 930 candle. How's the market react to it? We immediately get a push up off of it. So now we go, okay, there was a lot of interest here, a lot of aggressive selling here. Yes. We can even zoom in and go, yeah, there was clearly a lot of interest here. I mean, look at the negative delta on this. I mean, the amount of selling that came in at this zone is insane. But the market's reaction was push up out of it. Meaning there's passive buyers absorbing, and now we're getting a strong push away. And then we go here and we go, okay, yeah, but yes, we ran through this bearish zone, and we're approaching this one. But I haven't even seen a bullish one created yet. So, like, does it matter? Here we go. There's one. Here's another. So now you go, well, maybe I can take a long, right? Do I put my stop here? Do I put my stop here? Maybe I'll just put it here. Maybe I'm getting in early. There's a bullish imbalance. After we know we hit our key location, right? Higher time frame zone. We know that's our location. We can see here that if you're just looking at a 1 minute chart, you would put your stop here, or you would put your stop here, or you'd at least put it at the bottom of this candle. And you would think that you entered late. But now that we have this, we get to go, okay, well, you know what? If I'm wrong, I'm already up on the day. I'm willing to risk 20% of my daily profits. And if I'm done, maybe I'll risk one more. If not, I'm just done, right? And so how does the market react to this? Okay, a lot of a selling comes into this area. Bullish zone. Okay, now we have a push up out of it. A new one created. Oh, we see a push up out of it. Cool, I'm going to move my stop here because there's 2 in this area. Oh, yeah, no, I didn't stop. Okay, yeah, now a new one comes in. Great, I'll put it here. A new one comes in. I'd want to see a strong push away. A new one came in. I'll put my stop here now, right? Or here, wherever. Okay, and we get stopped. And now we're up 37. Oh, and where did we see our rejection at? Basically at VWAP. And what happened? There was a lot of aggressive buying up here, and the market immediately moved away from it. Right? All of this does is give us more conviction in the already existing trade ideas we have. If you weren't looking at that other chart, the range chart, you would still go, yeah, well, there's clearly a lot of failed buying here at VWAP and this imbalance that we created on the initial candle away from the move. And now we're seeing all these buyers trapped and the market move down. Yeah, absolutely. I agree with you. You're right. You're 100% right. No doubt about it. Same thing. Yeah. We had a strong push up, straight to the point of control of the composite. A lot of buying happened here, and the market's immediate reaction was to move away. But even then, if you can wait for one of these, maybe now, okay, yeah, this got ran through, but I'd want to see a bearish one, a bearish zone pop up for me to take a short. Okay, yeah, let's watch. Does one happen? Okay, there we go. We got it. And what happens? We can move down, right? And so now what do we get? Let's say you entered like here. Cool. You still got 60 points out of it. I know you're looking at this going, well, this looks too easy to be true. Backtest it. Because I've backtested and forward tested it. I've backtested the last like 2 months with this, and I've used it. It's pretty crazy. And it's all in alignment with everything else that we use anyways, right? And now, looking here, you go, oh, well, there's a CBD divergence, right? Low, higher low, low, lower low. So clearly the higher time frame after this push, okay, I might be bullish. But I would want to see one of these hold or a new one created. Oh, look. I'd want to see it at least hold. Let's see. Okay, there's a bearish one. You get run through it. And now this one holds. Bearish ran through. And I know this looks like a lot, but look at the time. This is 10:08. Right? Right? So this all happens in the first 45 minutes of market open, or it did on Tuesday. When the market is this volatile, and this is a 1 minute chart, right? These candles are huge, you know. You get to be a part of the move, but sometimes you have too wide of a stop. And you may be gambling your entries. And you're saying, well, here, I know that this imbalance held. We have a CVD. We see all these bearish imbalances put in place, and we see a strong bullish move out of it. And we pull back to the bullish imbalance and hold, failed selling. Yes, yeah, absolutely. But here you get to say, oh, and while all that is happening, I get to use these zones to get precision sniper entries, which is what we all go for, right? Everybody wants to be a sniper. And so, once again, like, I'm fascinated with how Fabio created this and how good it is. No wonder he's a trading champion, because this really is an amazing tool. Using it in alignment with everything else that we learn and just understand about order flow and just this platform in general it's pretty crazy. So that was Monday and Tuesday. I will show one more example. I'll show Wednesday real quick. But the whole point of this is an extra tool to help you understand your entries. But also, if you just wait for a little bit more confirmation, which is kind of my point, it doesn't necessarily mean that you're compromising your risk to reward. If you use this tool, you're still going to get a great risk to reward in general. It completely takes away the gambling. letting these other charts hold. We'll watch this real quick. Okay. 5 minute. Tuesday, which I called this is the initial move down, pulled back. I called a long, which I showed you guys in the Discord after this play. I called a long like in here somewhere. And we just pumped the entire rest of the day because it was in line with where the market wanted to go, right? So even today, higher time frame, I go, okay, we know we have this move, which supported, of course. Look at this low volume area right here, which you can see it on this profile as well. It's where we have rejected once, twice, 3 times, 4 times, 5 times. This area has rejected a lot. It's the value area high of this higher time frame composite and all-time highs. Well, that's the one of all-time highs. But of the higher time frame composite, this is an area where we've had a lot of rejection. So I'm clearly thinking, well, the market's bullish at least until it gets to this zone. These are all things that I said in the Discord when I was live trading. This was the clear draw, especially after this bounce where the market wanted to go. So I want to look for longs. Because until sellers show us they're in control, I want to see bulls still remain to push the market up to where the market is wanting to go. Clearly, we're above the value area high. So this is kind of the same principle of what we looked at on yesterday's example, is that, hey, if we're above the value area high and buyers want to continue moving the market up, they should do it with, it should be so aggressive that I'm not having to question if they're being trapped, right? Clearly, there's a lot of buying effort up here. We see that. And if sellers are going to regain and they want to move back down to the point of control, VWAP, value area low, they should trap buyers and their efforts should be rewarded, and we should see a pretty rapid move, and the speed of tape should reflect and the CBD should reflect. Same thing that we keep talking about, right? And then we look here and we go, okay, well, the market's about to open and there's clearly this bullish zone. So I'm leaning to longs. This is what I want to see. And then we open. Strong push into here. I'm bullish. Cool. Let's get in longs. And I took a long, and I got a little profit out of it. And I think I put my stop. I took a couple off, adjusted my stop, and here's what happened. We still are pushing up, decent move. We're up 40 points. Yeah, this zone held and this zone held. But then we look at the 1 minute and we go, okay, clearly this breakout candle or this initiation move, this large amount of buying coming in as the market's opening. Yes, there is a lot of buying on the speed of tape. We can see there's a lot of buying on the CBD clearly. A lot of buying on this candle, but then there's failed buying at these upper wicks. And now we create this buying imbalance right here. A lot of buying imbalances, and we're moving through it. So it's like, okay, if we're clearly bullish, this is just going to hold. We're going to see failed selling, and then the market's going to keep moving up, right? Like a clear uptrend does, like we've seen in the last 2 examples. But here's what actually happens. Now that we're through this zone, okay, we create a bearish effort zone, right? Well, if this is bullish and the market is going to go up, right? If the market is bullish and it's going to keep going up, these buyers won't be trapped. Clearly, right? These buyers won't be trapped. These imbalances won't get run through. We would create bullish zones of effort, not bearish. But if we look at the 5 minute, we go, oh, well, actually, we're still in this business zone if we continue moving lower. And that's a crazy 5 minute wick. That's a lot of buying. And we can see clearly there is a huge, 10% of this candle is a positive aggressive buying delta. And what's the result? Well, we're moving away from it. But here's where you go, oh, and this is what's all happening inside of the 5 minute candle. Inside of the 1 minute candle that I'm looking at, I'm going, well, here's the zone. And so you really get to see everything in depth. It's like having X-ray goggles, X-ray vision. It's really cool. I'm telling you, Fabio, this is the most fascinating indicator I've seen. Okay, now we get another push up, right? Okay, so Let's analyze it. 5 minute, crazy wick, huge absorption area up here. Buy imbalances left. I mean, this is like what we saw on yesterday's example, all in one candle, right? Absorption, imbalances, all in one candle. It's crazy work. We go the 1 minute, we go, yeah, I mean, look at the amount of sheer buying happening here. Well, these buyers are trapped and we have this sell imbalance or this buy imbalance, and we're getting a strong push through it. But we're in a, we're kind of in a range where there's a fight going on because we have this bullish imbalance right here with aggressive selling and we pushed up. But we have this bullish imbalance, which we've run through now. So sellers are in control and it's holding. So like there's a fight here. And if you're just looking at the 1 minute, you're just analyzing the fight and you're going, well, who's going to win? We have a CVD divergence because we have the highs, but the buying's still moving up, right? So then we go here and we go, okay, who's going to win out of these two zones? Okay, we see a double. Two of these buying effort zones show up, right? And this sell one has held twice. And these imbalances are continuing to hold. The speed of tape is slowing down. Clearly this, no matter what time frame you look at it, okay, buyers are not being rewarded despite their efforts. What happens? We get a sell-off, a quick one, right? On this candle, what happens? Look at the speed of tape and see how you can use this to your advantage. This is the opening candle right here. This one. This candle has more volume than this one. So clearly there's a lot of participation happening here. What does it look like on the chart? 1, 2, 3 prices where there's a lot of aggressive selling and they're absorbed because we have a huge upper wick with a lot of aggressive buying coming in. So clearly there was a lot of participation here and buyers are winning it because all these sellers are trapped at the point of control. Also with the shift candles, you can see that they held here, right? So you can see using these tools, okay, do I want to take a long because these sellers are trapped? Do I just want to long up to this zone? Do I want to long back up to the highs? Do I want to long up to the, or am I taking a 1-to-1? Because clearly, despite there being a lot of interest here, buyers are winning this. And we're overall bullish anyways. And I see all this failed selling. I know this zone could protect, so maybe I want to take most of my position off here, right? Is that the entry that you want to take? Or do you want to watch this? For me, my style, I can't long this. Because yes, there is a lot of selling down here. And yes, VWAP did hold. And yes, the POC did hold. And yes, these shift candles held. Yes, I know. I hear you. I get it. But as long as I see this, as long as I see these buyers absorbed, and I see this selling candle or this effort zone be bearish and this effort zone be bearish, I don't feel comfortable longing. Otherwise, I'm going against who's in control between buyers and sellers because that's what this indicator is telling me, right? So yes, I get it. I get it. This is a good long. I understand your reasoning for it. If that's the long that you want to take, you can, but I personally can't take it. I can't. And there were people wondering why I wouldn't. Because of this. Because of this, I can't. I seriously can't long that. So let's see what happens. Yes, more buying coming in. Like, I get it. Okay? Now we've come up to this zone. Do we buy through it? Instant rejection. Another one created. There's a fight going on, right? Sellers are winning. Buyers are winning. Buyers controlling this. Sellers controlling this. I don't trade that. When the direction is unclear, through buyers controlling, sellers controlling. Clearly, the sellers won this zone again. Okay, another fight. I'm not gambling and I'm not guessing where the market's going to go, because clearly at this range, there's a lot going on. Like, there's buying, holding, and selling, holding. I'm not trading that. I'm not guessing. Get that, please get that through your head, guys. You want the narrative to be so clear. Seriously. Okay, now these zones have been run through. And we pull back to this bullish zone. Yeah, we're going to take out that high. Of course we are. Of course we are. Yes, I know. Because this was run through, this was run through. New one created. Yes, we're going to take out this high. So you get in because we reclaim the value area high, and you move your stop under this zone, and you target this high. And speed it up a little bit. And great, we take out the high. But the whole reason I wouldn't long this anyways, even though, like I said, it was right if that is your trade idea. If this is your trade idea that you're just trading to this high, good, you took the right trade. But you better have taken off here. Because we already knew that at this price, we had a lot of instances of failed buying. And the moment that we came back up to this high again, wow, looks like more absorption, because the second we hit this, what did the market do? It moved away from it, and it created a bearish and bullish imbalance, and the market moved through it insanely fast. So yes, if your entry was, if your trade idea was, I'm targeting this high, and I see this zone created, and these sellers trapped, and this bullish zone created, and this one run through, and we pull back, I'm going to long to here. I applaud you. That is a great trade. The reason I'm showing you this is to really get in your head, you better define what your trade idea is before you enter. Because a lot of people were longing this just to go, yeah, let's just let it run. Yeah, that's a great idea. If we didn't have this already. This is the reason this is our target. I really want that to make sense. This is a good trade if this is your target. This is not a good trade if this is your target, because this is here. Please understand what I'm saying. You have to define what your trade idea is before you enter, because your exit, your take profit, and your stop has to be aligned with what your trade idea is. Please, please, if that's all you get from this video, please understand what I just said. Because tell me how we just took out this high, but we did it with less participation, right? Like I showed you in the first example. If we see a high taken out and we're going to look for some kind of continuation, I want to see the speed of the tape increase. I want to see the CVD increase. I want to see bullish imbalances created, the bullish effort zones created. I want to see bulls, let's go, right? I want to see everything aligned. But you tell me how we take out this high. And the first reaction of the market is to say, absorption, bullish imbalance, disrespected, we move away from it. You tell me how this entire time, through this little swoosh, that the CVD is just increasingly moving up, but the market is barely able to take out this high, and when it does, we see a bearish reaction, right? We look at the 5 minute, we're like, well, yeah, duh. Look at that. I mean, filthy, filthy. And now we're moving back away from these guys again, right? So please define your trade idea before you enter, and understand what you're going for, and understand like what you're trying to get out of the market. Because if you are longing from here up to here, like, I just hope you would have taken most off here, because this is the reason that you don't want to long, because these guys are trapped until we see, we see a new bullish effort zone created or a bullish imbalance created. And you know what? Maybe these guys are trapped and this one's trapped, but we get a pullback to this zone, which is the value area high, and we hold and we move up again. Yeah, okay. But if you enter here, you better have your stop here then. Because what if this gets run through? Like we talked about in the first example. Because what happened on the first example? When we took out the high, we created a new one of these. But what happened on this example? We took out the high, absorption and moved away. The first one was bullish and we saw it pump. So this doesn't look like the first example that we looked at. So automatically in your head, you must be going, this doesn't look this, something's not right. Because I know what a bullish trend looks like, and I know what bullish order flow looks like. And this isn't bullish order flow because there's a lot of trap buyers here, and there's a lot of now new trap buyers here. And I zoom in on the candle and I go, a lot of buyers at the highs, and the market's immediate reaction was to sell off. Right? So what happens at this zone? Oh, yeah. So we break through the bullish zone, creating the bearish zone at the level that buyers were absorbed. So clearly effort of sellers was at this same level where we trapped these buyers, sold off, trapped these buyers, sold off. So what direction is the market going to go? If this happens and this happens, this happens, this happens, it's going to go here, right? And we're not guessing. It's not hard. Like you can see who's in control, who's winning. A lot of buying effort and we're not moving up. Selling effort comes in and we move down. A new one comes in. But no bullish zone was created, so guess what? We kept selling off, right? First bullish zone that comes in. At our value area low. Okay, here, long, yeah, of course, because we're at the value area low. Same level that we found support here. Right, and then you can just play the ranges. And I ended up taking a long later on in this day, and I'll show you where. Because I think this takes a little bit to play out. But I really want you guys to see just how easy this can be. Where did I take the long? I think it was right in here. Pull up Discord real quick. 26s. Trailing hit for about... Yeah, it was like right around 11-ish. Yeah, I think it was like this bullish zone. Yeah, exactly. It was this bullish zone at the value area high. At the value area high, right? Where, yes, I know we failed here. We failed here. These bearish effort zones were disrespected. This one was created. I said, okay, I'll take some off of my position here. And I did. And then just had my stop at break even. But we actually found support. And we continued ripping up through the rest of the day. So, I was a little bit more patient on that one. But zone disrespected, zone created at our value area high. This was my target because I knew this is where buyers could fail. This, and then, okay, first bearish zone created, what happens? I think we just chopped the rest of the day. But yeah, these were the trades of this week, guys. Remember everything that you do. Align it with the overall market. Align it with what is going on between buyers and sellers, right? Because when we initially found support here and there's all this failed selling, at the time it was the value area low. When we initially found resistance, it was at VWAP and it was at this deviation band. Okay, we broke through VWAP and we pulled back and it was support now. But more than just the support, it's also like, okay, now at these support and these key levels that we're expecting reactions, okay, now we get to see who's in control between the buyers and sellers at these zones. And so you have the ultimate confirmation and you decide who you want to be and what you need to see in order to take a trade. Do you see that we support the value area low? At this time, it was the value area low, and we have 1, 2, 3, and it's also this deviation band. There's 3 areas where there's buying effort. You're like, dude, I want to take that long. And maybe I at least target VWAP and then target value area high, and maybe this is high, and I'll keep a runner. Cool, yeah. Once again, that's the point of this video, is to show you that you can enter with the trend or away from the trend, but your trade idea defines what you hold for and where you're looking to target based on, I know the market can reverse on me here. if the market comes to this area that I know it wants to move to, I could see some kind of reaction that the market is going to move back towards my stop or my break even. Therefore, I'm getting out of the trade. That's the whole point, right? That's the only reason we get out of trades. We wouldn't get out of trades if we knew that the market was going to keep moving up or if it was going to keep moving down, right? We would just hold it. But that's why we have exits. It's where, okay, this is where the market could reverse. So we break through VWAP and we pull back VWAP and the POC and see this zone created. At the time, there were still these bearish zones. So, okay, these could hold again. We have a lot of buying into it, creating a new bullish zone, and we have a push up out of it. Cool. Where was my stop? Like here. I had an insane risk to reward because I knew worst case scenario will at least come back up here, right? And that's what happened. Luckily, I was a part of the bigger move too. Not with much size, but I was still a part of it. But it's all aligned with the overall market. It's aligned with what we're seeing at our levels, right? And I just really want that to make sense. Also, on this move out where we, and this was a little bit after I entered, after these zones were disrespected, I looked at the speed of tape. Oh, there's a lot of speed on this candle too. Cool. This is confirming that buyers are clearly, we're seeing some push up because there was a lot of buying that came in after we took out these highs, and then we kept moving up, which is not the theme that we saw earlier in the day. This is what we saw Monday, right? When we were looking at that example. Took out a high and then we keep moving up. That's what you want to see, right? You don't want to see an instant reaction. That's not what you want to look for. So, yeah, of course, 5 minute, same thing. A lot of failed selling here at this value area low. But this is just kind of a general knowledge of, hey, I'm bullish on the higher time frame because I know that the market wants to go to this low volume area on the higher time frame because this is where we continue to reject. This is the area that we rejected from Thursday, and we did take out Thursday's high. So now the market's just kind of chilling in this spot, I'm pretty sure. I didn't even look at the chart on Friday, but I think it's somewhere up here. So our draw was correct. And guess what? Next week, I'm going to make another one of these videos. And I'm going to do it for last week. Because somebody on the last video said, like, you're just cherry picking days. No, I'm just showing you every week. And I'm going to make one of these videos every single week. And I'm going to show you the trades that I take. Because I'm not just back testing. I'm showing you what I saw in real time to take these trades. Like I said, watch the first video and look at my payouts. I'm not just showing you guys back testing. I've learned from the greats. Andrea, Fabio, Carmine, order flows, guys that have really made their name with this stuff. So, yeah, but that concludes the second video for this series, guys. I'm going to be doing these for a while. I'll be trying to make them every weekend, so Saturdays or Sundays. I was going to make this morning, which is Saturday right now, and I realized I had a meeting at 4, and I tried to start recording it at like 2:30-ish, and I was like, yeah, I'm gonna need more time than this. So I waited till after to start recording this video. So yeah, but please watch the first video if you haven't. What you should take away from this video is, let's bring it back real quick. Your entry depends on your trade idea in comparison to the overall market context. So where do you think the market's going? Where's the market? No. Where's the market show you it's going? Right? Where's it at in that big grand scheme, using what we saw in the first episode last week, and then using the 5 minute, the 1 minute, understanding our profiles and our values and these business zones, and looking at the relationship between these buyers and sellers, and looking at VWAPs and deviation bands and the CBD and the speed of tape. And then we get to use this deep effort indicator. Okay, who's in control? I want it to go up. I'm bullish. But when we attack this high, bulls are not in control and sellers are. Another thing, if I was bullish here, but sellers clearly are in control through these zones, and I short, my only target would have to be VWAP. Or at most, the value area low. Like at most. Why? because my trade idea is I'm bullish, right? Overall, I'm bullish. In context, or in, alignment with the overall market context, is like, I'm bullish. I know where the market wants to go to. So if I'm shorting against where I know the market wants to go to, I better take profit somewhere like, hey, buyers could clearly step back in because they've shown us all week that they're in control after bouncing off the high time frame value very low, right? That's why using the location and understanding these higher time frame volume profiles is so important, is because, if you are just looking at this right here, like, that is a clear short. 100%. That's a clear short. Failed buying, selling, step in, move down. Failed buying, selling, step in. Likely we're going to see the same thing. We do. Yes. But if you understand the full narrative, and I know I'm just on the range chart, but if you just understand the full narrative of the market, it's like, oh, okay, well, I can't short this all the way down here, right? Because I know the overall context of the market is bullish, so I just have to target POC, VWAP, maybe value area low, because I know buyers do have the interest of wanting to push this market up. So I actually didn't short these, as great of trades as they were. And I know people that did in my Discord, and they made money. That is great. No, seriously, like, that, good. Like, I'm happy to hear that. I really am. I'm very happy to hear that. I was really happy to see it because they took great trades based on what the order flow was showing them. But then when I told them at 11, I was like, hey, I'm in longs. They're like, bro, what? I was like, yeah, because finally my setup showed up, and I had to wait for it. But like, it finally showed up, and we got our push. We got a strong move up. But I had to be a little patient. But it still happened, and this would have been a good trade, right? So please understand that. Like, whatever direction you are trading, there we go. Sorry, my screen was messed up. Whatever direction you were trading, understand, is it in alignment with the overall auction and where it wants to go? If so, take profit at an area where the market could reverse, and then maybe hold a runner to the higher time frame draw. If you're going against it, target where the market could find support or resistance, because then once the market reverses, it's going to be very quick because it's now moving in the direction of where the market wants to go. Your stop should be the invalidation point of your trade idea, not just longs or shorts in general. And what I mean by that is, last thing, if you're taking a short here because you go failed buying, selling zone created, one attempt into it, two attempts into it, I want to short down to the point of control. Maybe you can put it right here. You don't necessarily have to put your stop here, because your trade idea is not these this is a part of it. These buyers are trapped, and so I think that the market's going to move all the way back down here. That is a part of it, but the trade idea and your entry is, well, these guys are trapped, but then these sellers showed us that they have a lot of effort and they're wanting to move the market down. So then maybe I can just put my stop here. And so now you basically cut your risk in half, because this is the entry model. This could be a part of the trade idea, but this confirms why you're entering. Both would have been right. One gives you a much higher risk to reward. This gives you a 4R. Excuse me. This gives you a 2R, right? So that's a very important thing. Your entry and your trade idea all has to be in alignment, because the difference between a 2R and a 4R is a lot of money, especially when you start trading with size. And so you need to get used to it now. This is how you get used to the precision. And then the second this bullish zone gets run through, then do you go, cool, I'm going to go break even or trail here. And you would have had a clear run straight to your TP. All right, and that's how you should frame every single trade. So, okay, that's it. That's all for the entry model video. I will be flying next week. I'm going back to my hometown for Christmas, but best believe I will still make a video if I have the time. But this is going to be a weekly thing where I start going over the trades I take throughout the week, how I'm using Deep Charts, and what a wonderful platform it is. Thank you, Fabio. Thank you, Andrea. It's awesome. I'm learning more about it every single day. But I'm continuing to find success and improve with it. I think I finally found my template for it. So I'm really enjoying it. But this wraps up November. When you guys watch this, it'll probably be November 30th. I had a 50K month, 100K in the last 90 days. Put it in the books, and we will look to have an even better December. So that's all for this video. I'm going to put my Discord in the caption or the description if you guys want it. There is a free portion and a paid portion. If you want to watch me live trade, it's paid. If you want to go in there and have a really good community and just talk to the people in the general chat, you can do that as well. I'm not telling you need to buy, but a lot of people have found a lot of value with it. So do what you must do. I'm still going to be posting these. And yeah, I just hosted a webinar yesterday as well. And I'll be hosting a couple more throughout the next couple months. So just stay alert for those. But yeah, that's it. That's all I got for this video. So, okay guys, have a great rest of your day. Have a great December, and I will see you in the next video.